your own expectations?
Hi. Firstly, this is going to be the first budget that is being presented after a hibernating phase for the world economy and, of course, India included. So it will be a very crucial moment in terms of expectations from this budget, both in terms of revenue expectations and expenditure. The good news is that if you look at India's macro meter, it is looking like it's ticking upward. You look at the very early indicators, even as recent as December 2020, quite a bit of the sectors are showing an uptick. Collections have been very buoyant. So there is a lot of expectations, I would say, which is getting built up into the budget, which will likely be presented in the coming week.
So high budget deficit, high spending, what will it mean for the bond market? How will it react?
If you look at FY22 and the last quarter or trend, the collections on the indirect taxes, the collections on the GST, which is the goods and service taxes, and overall revenue growth for the government of India has been showing an uptick. That leads us to believe that the fiscal deficit number, which took a backseat in terms of discipline for FY21, could significantly be lower in FY 2022. Markets are expecting a number anywhere in the band of 5.15 to maybe 5.3, 5.4%, which would mean a total gross borrowing of government bonds anywhere in the region of INR 10 trillion rupees to about 10.5 trillion rupees. Now, if that were to happen, it's a no-show or a neutral event from a market standpoint. If anything on the north side of that, it is likely to spook markets. I would assign a low chance for that eventuality, and anything lower than that would certainly be positive for bond yields. We could expect at least a 5 to 10, 15 basis points mellowing down or softening down if that were to happen.
Right, and there's also the RBI, of course, making sure that hopefully there is enough liquidity to absorb all that supply. Before I talk about the RBI, Lakshmi, can I just ask you on the supply point that you just made, do you expect more supply on the short end or on the long end?
So if you look at the way the yield curve is positioned right now, India has one of the steepest yield curves, at least what I have seen in the last 2 decades. Given that it is very unlikely that you will have a very concentrated calendar on the borrowing side, it has to be spatially distributed. There are a lot of terminal benefit funds, retirement funds, which have demand for the long end bonds. So there is a reasonable high chance that the north of 25 to 30 year bucket could see a little bit more supply to satiate the demand. The belly of the curve, which is around the 10-year segment, is so far reasonably well supported because of the Reserve Bank of India conducting open market bond purchases. So they will need to be very mindful of concentrating the supply on any one given bucket. One could expect floating rate bonds from the government of India also playing a key role in this year's or the upcoming supply.
Okay, and then to your point, ma'am, right after the budget, we have an RBI decision, and hopefully they give us guidance on perhaps purchases because they bought an unprecedented number of figure of debt in the last fiscal year. Do you expect that quote unquote support to continue, if not go up, from the RBI?
Well, the expectation of support may likely continue, but we expect the quantum or the magnitude of support that happened in FY 2021 may not really see the same magnitude. The bond markets probably will still look out for some anchor from the Reserve Bank of India in terms of continuity in open market bond purchases. That has been one of the key catalysts, apart from rate cut and liquidity, which has kept the mid-end of the yield curve static or stable. Left to itself, it is very difficult to see lack of open market bond purchases and 65 to 70% of the total bond supply coming into or the total fiscal deficit coming in via government bond supply, it's going to be very difficult for the government of India to scale through its borrowing programs. I think there is judiciousness expected from the RBI as well in the upcoming policy.